acting governor of the Central Bank of Nigeria, just after the meeting in the State House yesterday, came up with policy decisions talking about the plans of the president as it moving around, telling us what the president plans to do to address this ugly development as it is with regards to FX challenge. Take a listen to what the CBN acting governor has to say after discussion with the president.
As you can see, I'm in the State House, and Mr. President was very concerned, or is very, very concerned about some of the goings-on in the foreign exchange market. And one of the things we discussed were what could be done to stabilize and what could be done to improve the liquidity in the market and also the goings-on in the various other markets, including the parallel market. He is concerned about its impact on the average person, since unfortunately a lot of activities that we do, which are purely local, are still referenced to exchange rates in the parallel market. We've discussed and I've shared with him what we're doing to improve supply. If you look at the official market, you'll find that that market has been fairly stable and the spreads or the difference have not fluctuated as much. We do not believe that the changes going on in the parallel market are driven by pure economic demand and supply, but are topped by speculative demand from people. Some of the plans and strategies which I'm not at liberty to share with you mean sooner rather than later the speculators should be careful, because we believe the things we're doing, when they come to fruition, may result in significant losses to them. But my presence here is more about the concerns the president has and his need to know that we are doing something about it, assurances of which I have given him totally.
All right, there now joining me live to discuss what this means from the United Kingdom is an investment strategy manager with Afrinvest West Africa, Mr. Temitope Omosuyi. Good afternoon, Mr. Omosuyi. It's good to see you.
Thank you for having me, Tolu.
Yes, I would like to start that the CBN now is coming up to say they need to adopt new measures to address this trend. As at yesterday, we saw the dollar to the naira almost 950 naira in some cases at the parallel market. That was the exchange rate. As at today, there seems to be a little bit of reduction between 895 and 900 naira. That's according to the figures I got before I came on set. But I want to ask you, what do you think went wrong along the line?
All right, thank you very much, Tolu. This period is very critical to an average Nigerian and to everybody, because the exchange rate volatility is becoming very disturbing. So I'll start from where the acting CBN governor stopped. He talked about how the current volatility is hinged on speculators' activities at the parallel market. However, you would agree with me that the 43 items that have been excluded from having access to FS at the official window are very, very substantial in terms of their demand of FS. So certainly we cannot categorize these demands, as speculators. These are real demand. And the second point would be about the efficiency that he spoke, when we talk about market efficiency, right? In finance, market efficiency is to allow prices to reflect information fully. So if you look at the official window that seems to be relatively stable, you will agree with me that the market is not efficient. And why do I say that? Because there's still huge demand. That is, those 43 items that are not in the window, if they were included in the window, that market would have reflected what is happening at the parallel market. So what I'm saying in essence is that an efficient market has been what the acting CBN governor has consistently talked about. And efficiency does not mean that there's going to be appreciation or a short-term appreciation to the naira, but it will allow the pricing we are seeing, and what we'll continue to see at every point in time to fully reflect the dynamics, the interplay of demand and supply. So I think the first step will now be for us to allow this efficiency to really reflect at the official window. After that, we can now begin to talk about how to achieve, the ways to achieve stability in the FS market. Whichever market we are looking at now, we have to look at how to achieve stability. Otherwise, we'll continue to keep foreign investors on the sideline. And the major discussion when it comes to stability is not even about the channels. It's not about just the efficient market, which is a precursor, is a precondition. However, supply of FS is critical to FS stability. And before you ask for other questions, and I think it's important for me to explain that when it comes to FS pricing, there's this notion, before what we are seeing now. About 2 months ago, we thought that FS, or market generally believed that FS rate should be around 640, 650. But it's very important to stress that equilibrium price is dynamic. So equilibrium price as at yesterday would be a function of the quantity of demand in form of naira and the availability of supply. So what we are seeing at the moment, regardless of the kind of or the component of demand, speculative or real sector demand, regardless of what you see there, the pricing is reflecting the interplay of demand and supply and is establishing a new equilibrium. So the new equilibrium is actually the same thing as what you're seeing. Yesterday we saw 935 and 945, and we'll be seeing that for the last about 2 days now. In fact, last week we saw that. So that speaks to a fact that the market in reality, equilibrium is dynamic. You cannot confidently say that exchange rate should be at 640 is a function of demand and supply at every point in time. So if we have enough supply, we'll see a proper adjustment. And if it's the other way around, then market will reflect appropriately, irrespective of what is happening in the official window. The parallel market is highly efficient and will continue to tell the better story about the capacity of the CBN to supply the market, or the capacity of the economy to provide adequate supply of dollars to meet demand.
It's a good way to start this conversation, Mr. Omosuyi. Very brilliant submission from you. But I'm going to take you straight to the issue of improving liquidity in this market, which is something that is very important at this particular time. And we know the sources of FX generation for us as a country. What more are you seeing? How exciting do you think those abroad will even want to send in their monies at this time? Do we have that attractive or enabling ground for them to want to bring in more FX so as we can to help shore up liquidity, and for the bank, both the commercial banks and the Apex Bank, be able to sort out the needs of manufacturers and others?
Yeah, you've rightly alluded to the major source of inflows, FS inflows into Nigeria. It is remittances, way higher than oil, capital inflow, and other sources. In fact, Nigeria sometimes receives as much as 30 billion in remittances, yearly. But because we are seeing a bit of slowdown, and the reason would be as a result of some kind of, economic challenges in advanced, world. And you would also agree with me that inflation in the US, despite the fact that it's decelerating, people are still grappling with, increase in prices in the UK, in Europe, right? In Eurozone, we are seeing increasing, price level. That, in a way, is affecting, inflow of remittances. Another point is that we are begun to see a renewed divergence between the official window and the parallel market. Prior to this major divergence, when we saw a bit of convergence about last month and 2 months ago, with other supporting policies that have begun to encourage, remittances to flow through the official channel. But because there's now divergence, I think the story is going to change, or have begun to change already, because no one would want to come through an official channel that you can only get 740, 750, while the parallel market is at, is at 940 and is going higher. So I think it's actually very important at this point, not just looking at remittances alone. One, I think we have to address the concern around the 43 items, so that I think we have to be clear on that. We want a unified market. Like, it has to be clear that the market, when we have a segmented market, when we have price discrimination of the same product, in economics, we believe that it is not a good strategy, especially when it comes to the same commodity currency. When we create what we call arbitrage, pure arbitrage, because the products, what we are talking about is currency, is the same. So long the prices are different, then you continue to create arbitrage. The model that the CBN is looking for on the official window will continue to go to the parallel market. So that must be addressed. The 43 items will not, at best, when the 43 items are included in the official market, if there are no enough supply, they will still find their way in the parallel market. However, the market must be efficient. On the basis of what I explained earlier, an efficient market must reflect the full information of demand, but the current official window is not reflecting the full information, and the lack of information could also stem from the 41 items that is currently banned. And the second point could also take us back to what happened in 1997, the Asian crisis, similar to what Nigeria is going through at the moment, very similar, because when the Asian crisis affected Malaysia, Thailand, South Korea, right? These countries also started with a major devaluation of the currency. They saw huge depreciation of over 40 to 50% across these economies, right? Because they are depleted their reserves, similar to what we are seeing right now. At some point in Nigeria, our reserves was well over $50 billion. But so far this year, we've seen that the reserves have consistently plummeted. Not even to talk about the story of which part of this reserve is spendable or is available for the CBN to defend the Naira. So Asian crisis was on the back of this. But 2 years after, 1999, they had to take the bull by the horn, because they had to speak to the IMF, the World Bank, and the Asian Development Bank for loan, because at this point in time, we cannot wait for FDI. At this point in time, you cannot wait for all the patient capital that looks so sustainable. And for FPI, for every foreign investor that wants to invest in Nigeria, they have to do it in Naira. Stock market, the bond market, you have to do it in Naira. So which means that you have to continue to price exchange rate depreciation. So if I'm going to make 14.95% on Omo, and I know that the currency is not stable, maybe before time end, before 2-3 years, currency will go down by 20%. That means I've already lost, or I'm going to lose 6%. So currency stability is very critical to FPI mobilization. So in a way, we may have to begin to talk to certain agencies, because right now we need all the foreign inflows as quickly as possible. We cannot wait to sow a seed that will grow that will grow in 2, 3, 4, 5 years. We need something very urgent. The same approach that was taken by these Asian economies, Thailand, South Korea, Malaysia, and they took this in 1999, but the decision came on the back of a major, aggressive reforms. Some of them we have seen right now. This Asian economy did away with subsidy. There was a major financial crisis, and the IMF, the World Bank, as well as the Asian Development Bank told these economies that they must allow these banks to go under because they could not defend themselves. In addition to that, they told government to cut spending. You and I know that spending has been a major, our spending pattern has been a major concern for everyone in the country. Budget deficit of over 12 trillion. If you subtract subsidy, right, you still see that the deficit is very huge. So we still have to do layers of policies that will help us to actually achieve whatever we want to achieve on a sustainable path. Otherwise, inflows of FS we'll still go into other areas that will bring us back to this point, because this is not the first time we'll be here. We were here in 2016. We were here sometime this year, and here we are again, exactly with the difference between the official rate and parallel market. So the lasting solution would be for us to have plans that will be subdivided into three: a short-term plan, medium-term plan, and long-term plan. A short-term plan would be what will give us immediate dollar inflow within the next 3 to 6 months. The medium-term plan has to do with what will give us, inflows within 1 to 3 years. And going forward, we must put in place sustainable strategy that will generate, consistent FS inflows for the country. For instance, if you pick South Korea, you can't believe that South Korea, is one of the major developed economies. But exchange rate in South Korea is over 1,000 as of today, but inflation is lower than 2%. The per capita income is extremely high, in fact, comparable to other advanced economies. So I think the bottom line is we must have this plan and follow through. In addition to that, we have to address our institutional challenges.
Institutional challenges. A very good one. But we also expect the likes of Port Harcourt refinery to come on stream before the end of the year. And also, moving on, Dangote refinery and all. Do you think that if all of this happens and we increase all receipts and we're doing pretty well, do you think the pressure on the Naira would reduce anyway, one way or the other?
Yes, I believe whatever would bring inflows into the foreign reserve would definitely alleviate the pain, would definitely reduce the pressure on the, on the Naira and in the FS market. However, in economics, we always say that in the long run, we are all dead. What should happen to Nigeria within the next 2 to 3, 4, 5 months that these refineries would not become functional? That is the question. Something has to change within the next 3, 6, and 6 months. Otherwise, we'll continue to see, surge in price of dollar in the market. So, and these refineries are also, I believe some of them are also hinged on certain exchange rates, because the more expensive it is to get dollars, right? It also becomes expensive for them to do a lot of turnaround that will keep all this refinery working. But even if we are able to achieve it, say it is extended for another 1 year, something must happen within the next 1 year, which is why we have to look at the low-hanging fruit.
The low-hanging fruits. Now, almost on a final note, we also saw Standard & Poor's, of course, upgrading Nigeria's credit outlook. And many say this is a form of stability, or maybe across the polity or across the economy. What is your thought? What are your thoughts around investors' confidence returning back to Nigeria at this time? Mr. Omosuyi, can you hear me?
Oh, I can hear you. I can hear you now. Okay, so I said that the review was largely expected. I would think that other rating agencies will follow suit irrespective of the current volatility in the FS markets, because one of the key parameters that this agency hinged their outlook or review was on our subsidy program. And they had mentioned last year that once subsidy is removed, and we take other measures. In addition to that, we are able to stop the financing, the ways and means finance to the government by the CBN, among others. They would review, some of this outlook. And we saw one of the steps, which was subsidy removal. And that's on the back of that, we saw that our rating, the outlook was changed from negative to stable. That has added to the confidence to an extent. However, we still have to address some of these challenges so that we see a major, because we need a major upgrade. What was adjusted was just the outlook. However, we need a major upgrade that will increase sentiment and confidence, I beg your pardon. Because if we don't get those major upgrades, regardless of, credit rating agencies' view, if pricing of assets are not favorable, we won't get foreign portfolio investments. And I need to also emphasize that, credit rating agencies are usually, I would say they usually lag events. What I mean by that is events would have happened most time before they respond to it. But I can tell you, I mentioned that market is efficient. Whatever we are seeing now is already reflecting in the bonds market and across our financial market. So what I'm saying in essence is that irrespective of what rating agencies are doing, they are just another layer of confidence on top of reality, because I can assure you that investors look at what is happening before they can now add views of rating agency on top of that. So if rating agency are saying something and investors are not seeing macro improvements to our macroeconomic condition, our fiscal condition, external reserve, among others, they will still stay on the sideline. And at this point in time, we cannot afford to keep foreign portfolio investors or foreign direct investors on the sideline. We need all the money we can get. A rating, an improvement from negative to stable may not be enough, because dynamics of the market is changing very fast in the light of the recent shocks in the economy.
Very touching one, but I'm sure it's just the way to go. I must thank you so much, Mr. Omosuyi. And this discussion continues. And of course, we'll keep a tab just to know how it plays out. Like I told you, today there's been a little bit of reduction in the exchange rate figures, but not where it ought to be. Mr. Temitope Omosuyi is an investment strategy manager. He's with Afrinvest, West Africa. Thank you so much for your time. Do have a profitable day.
A pleasure. Thank you.